Picture this. Your friend buys an AI stock on Monday. By Friday, it's up 40%. Everyone online is talking about artificial intelligence. Companies are adding AI to every presentation. Investors are throwing billions into anything remotely connected to it. And suddenly, people who never cared about technology are asking the same question. Am I already too late? But here's the twist. The most dangerous part of a bubble is that it usually starts with something real. And AI? AI is very real. That's what makes this complicated. Look, most people think bubbles are fake, like scams, like pure hype with no substance. But this is what most people don't realize. The biggest bubbles in history often formed around technologies that actually changed the world. Railroads, cars, the internet, smartphones, all real, all revolutionary. And still, investors lost fortunes chasing them at the wrong time. Now think about your own behavior recently. Maybe you've seen AI-generated videos, AI art, AI assistants writing your emails, code, resumes, and part of your brain starts thinking, this changes everything. Because honestly, it might. But here's where it gets interesting. A technology can be revolutionary and still become massively overhyped financially. Those are two separate things, and people constantly confuse them. Let's go back to the late 90s. The internet was exploding. Every company suddenly needed a website. Investors were euphoric, and stocks related to the internet went absolutely insane. Companies with zero profits were suddenly worth billions. Why? Because people weren't buying reality, they were buying the future. And for a while, it worked. Until it didn't. When the dot-com bubble burst in 2000, trillions of dollars disappeared. Entire companies vanished. But here's the strange part. The technology won. The internet still changed the world. Amazon survived. Google exploded later. The technology won, but many investors, they didn't. And this is the open loop most people miss about AI. The question isn't whether AI matters, it does. The real question is, which companies actually make sustainable money from it, and which ones are simply riding the hype? Now, let's make this real. Imagine a company spends billions building AI systems. Massive data centers, expensive chips, top engineers, massive electricity costs. And then, users expect AI tools for free or $20 a month. Do you see the problem? This is what most people don't realize. AI is incredibly expensive to build and operate. Some advanced models cost hundreds of millions or even billions just to train, and the competition is brutal. So now companies are trapped in a race. Spend more, build faster, scale bigger, or risk becoming irrelevant. And that is where bubbles begin. Not with lies, but with expectations growing faster than reality. Now, you might be thinking, okay, but AI companies are making money. Some are, absolutely. But here's where it gets dangerous. Stock prices are often based on future expectations, not current reality. And expectations can become irrational very quickly. Let's say a company believes it will dominate AI. Its stock doubles, then triples, then jumps another 50%. At some point, the company is no longer priced based on what it is, it's priced based on perfection. And perfection is fragile. Now think about this. If a company earning $10 billion suddenly becomes valued at $1 trillion, investors are betting on massive future growth, years of dominance, near monopoly power, continued hype. And if even one piece disappoints, the stock can collapse fast. This is where psychology takes over, because bubbles are emotional, not logical. At first, people invest carefully, then they get excited, then they get greedy, then they get scared of missing out. And that feeling, that is fuel for a bubble. Now here's the pattern interrupt. Sometimes people don't even care what a company does anymore. They just care whether the stock is going up. That's when things become dangerous, because the story replaces the fundamentals, the dream replaces the math, and the market becomes disconnected from reality. But wait, here's what makes the AI bubble different. AI actually is improving productivity rapidly. Companies are already using it to reduce labor costs, automate customer service, write code, analyze data. And that creates a second layer of fear. People aren't just afraid of missing investment gains, they're afraid of becoming economically irrelevant.
And this changes everything. Because now AI isn't just a financial story. It's a psychological one, a social one, even an existential one. Now think about what happens when fear and greed combine. Investors pour money into AI companies. Companies rush to add AI to every product. Startups receive massive funding, and consumers begin expecting AI everywhere. That creates a feedback loop. More hype, more investment, higher valuations, even more hype. Sound familiar? That's because every bubble follows a similar pattern. Different technology, same human behavior. Tulips, railroads, housing, crypto. Now, AI. This is what most people don't realize. Technology changes. Human psychology barely does. Now, let's zoom out, because there's a much bigger system underneath this. For years, investors lived in a world of cheap money, low interest rates, easy borrowing. And when money is cheap, risk-taking explodes. Why? Because safe investments feel boring, so money floods into the future. And right now, AI represents the future. But here's where it gets dangerous. The higher expectations rise, the harder reality becomes. If AI companies grow 20%, but investors expected 80%, stocks can still crash, even if the business itself is strong. That is the insanity of bubbles. Now, you might be thinking, so is AI fake? No, that's the wrong conclusion. AI may genuinely reshape industries, possibly entire economies. But revolutions create winners and losers, and markets often price in success way too early. Remember this. During the gold rush, many miners went broke, but the companies selling shovels often made steady fortunes. That analogy matters, because some of the biggest AI winners may not be flashy chatbot apps. They may be infrastructure companies, chip manufacturers, cloud providers, energy suppliers. And here's where it gets really interesting. The AI boom is colliding with another massive issue: energy. AI systems consume enormous amounts of electricity. Data centers require massive cooling and massive power generation. So now AI isn't just changing tech, it's pressuring power grids, supply chains, labor markets, everything. And that scale makes the story even bigger, which makes the hype even stronger. But bubbles don't pop because people stop believing in technology. They pop because expectations become impossible to satisfy. That's the key difference. Now here's the climax. The AI bubble is not really about artificial intelligence. It's about human nature. Hope, fear, greed, status, survival. AI simply became the newest object for those emotions. And here's the uncomfortable truth. Most people entering late-stage hype cycles aren't investing, they're chasing emotion. They see rising prices and confuse momentum with certainty. But certainty is dangerous in markets, especially during technological revolutions. So what do smart people do differently? First, they separate the technology from the stock price. A great technology does not automatically mean a great investment. Second, they pay attention to valuations. The math still matters. Third, they avoid emotional decision-making. Bubbles feed on urgency. Buy now, don't miss out. That pressure clouds judgment. And finally, they understand one powerful truth. Humans consistently overestimate short-term outcomes and underestimate long-term change. In the short term, hype creates chaos, overvaluation, bubbles. But long-term, technologies reshape society quietly, gradually, then suddenly. That's what happened with the internet. At first, people mocked it. Then they overhyped it. Then the bubble crashed. And eventually, it transformed the entire world anyway. AI may follow a similar path: extreme excitement, painful corrections, then deep integration into everyday life. That means two things can be true at once. AI can genuinely change the world, and many investors can still lose money chasing it emotionally. That is the paradox. And once you understand that, you stop reacting like the crowd. You start thinking more clearly. So the next time you hear someone say, AI changes everything, pause, because they might be right. But in financial markets, being right about the technology is not always enough. You also have to be right about timing, expectations, and human behavior. And historically, that's the part people underestimate the most. If you want to understand how money really works, subscribe.